In a world where global trade dynamics are shifting by the day, one of the most recent and most silent moves from China could be the biggest game changer. No press conference, no big announcement, just a sudden shift. China stopped shipping rare earth metals, and the U.S. is feeling the fallout. In just 1 week, rare earth exports vanished, U.S. ports emptied, and Treasury Secretary Scott Bessent found himself pleading for a call with Xi Jinping while publicly insisting that America is stronger than ever. But the numbers tell a different story. The U.S. dollar dropped below 99.2 for the first time this year, bond yields spiked, and billions in foreign investment were pulled from U.S. debt. China's strategy? Quiet, calculated pressure. It's not negotiation, it's financial demolition. The Quiet War, China's strategic move. On May 31, 2025, the U.S. made a move, quietly extending tariff exemptions on key Chinese imports like smartphones, medical equipment, and semiconductors. But what's unraveling underneath the surface is far more significant. China has begun restricting rare earth exports again, a move that paralyzes 70% of U.S. critical mineral imports. This isn't about tariffs or talks, it's leverage. The impact is immediate. Cargo volumes at the Port of Los Angeles have dropped by 30% year over year. This is more than a slowdown, it's a financial strategy playing out in real time. Beijing isn't just holding a card, they've flipped the table. The power of rare earths and China's dominance. China controls 87% of global refined rare earth output and nearly 100% of the world's heavy rare earths. These are the minerals essential for everything from electric vehicles, EVs, to defense systems. U.S. companies like Tesla and Rathon depend on these resources, which Beijing can shut off with a single customs code revision. In just 1 month, shipments to the U.S. have dropped by 19% with no official ban, just unrenewed licenses. The Chinese suppliers in Jiangxi have paused exports to unfriendly markets. This isn't just trade, it's a calculated move to expose America's shrinking leverage. U.S. reaction, uncertainty, and inflation. Now, with rising pressure, Secretary Bessent is asking for high-level talks, but there's a contradiction. You can't threaten a supplier and simultaneously ask for a favor. This has put the U.S. in an awkward position. As tensions rise, we see inflation taking root. Coffee prices are up 17% in just 3 weeks as Colombian beans face tariffs. The price of Chinese-sourced electronics jumped 4.8% in May alone. So who's paying the price for this trade war? You are. U.S. consumers are already feeling the pain of this broken supply chain, with prices rising and retailers like Walmart passing on those costs. The bigger picture, bond markets and shrinking trust. The U.S. Treasury market is showing signs of weakening trust. Foreign demand for long-term U.S. debt is falling, with Japan and China reducing their holdings by $48.7 billion. Meanwhile, U.S. bond yields have risen sharply, signaling that investors are losing faith in the long-term stability of U.S. financial instruments. The debt ceiling crisis is adding fuel to the fire, with analysts warning of a potential economic fracture. So, who's really in control? In a game of global financial chess, who's truly in control? China has made its move with quiet force, undermining U.S. dominance in key markets. Meanwhile, the U.S. is caught in a web of debt, inflation, and declining investor confidence. The question now is, can Washington turn this around, or has the financial balance already shifted? As the debt ceiling is lifted and the U.S. pushes forward, trust may be the real currency at stake. If that trust collapses, this crisis isn't over, it's only just begun. So what happens next? Is this the start of a systemic shift, or just another cycle in the global economic roller coaster?
If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way.